Okay, so looking at the question that you asked me to help with, we have the balances there: 280 for vehicles and 126 272 for accumulated depreciation. Then we have asset disposal and profit or loss on sale of asset. So on the asset that is sold, these are the amounts: the cost, the accumulated depreciation, the date it was sold, and the selling price. So number one, the most important thing is our timeline, understanding when it was sold. Remember, you must always calculate depreciation until the day it was sold, not just the beginning of the financial year. So the beginning of the financial year is 1 March 2017 and it ends 28 Feb 2018, right? So likely in this question it is straightforward. The um the the asset was sold at the beginning of the year, so therefore this balance here on accumulated depreciation is the one that we're going to use to dispose of the asset, right? So an easy way of thinking asset disposal, this account, is like the dustbin account, right? You dust, is it dustbin or dustbin, whichever. um yeah, let me just say bin. So you just throw everything in there so to get rid of them in the books, right? Remember, you took the asset out of the business. So it's a car, let's say it's a Ford Ranger. That Ford Ranger is no longer on the premises of the business. It's no longer on your land. You no longer own it. So therefore you must also take it out of the books. So that's what happened in this way. I'm going to take this out and take that out, right? So as part of this cost here, we also have the cost of the vehicle that was sold. And then we say asset disposal, and the full 160,000 there, 160,000. Then we have another here, right? So you're going to debit credit as vehicles, and then you're going to debit asset disposal. So here you're going to say vehicles, and then the full cost amount of the vehicle that you bought, 160,000, not the carrying value or anything like that, the full amount. Then we take out the accumulated depreciation. So accumulated depreciation up until that day was 86,272. So we're going to say here same thing, asset disposal, 82 86, sorry, 86 272, right? And then you're going to bring it into your asset disposal. So you're going to say accumulated depreciation. There you debited it, so here you're going to credit it with 86,272, right? Then you have something else that has to come in here, right? So the asset disposal will always consist of three things. It will always consist of your vehicle or equipment, whatever the asset is. Accumulated depreciation will always stay like that, accumulated depreciation. And then lastly, it is going to be your bank meaning how much money you got. So looking at it in a logical way, there's your bank. Bank is an asset, right? If bank is an asset, it increases on the debit side, decreases on the credit. So when someone pays you for this, they are buying that asset from you. Therefore, it would be whatever amount they bought it for. Here it was 75,000 rand. So here you would say 75,000 rand here, 75,000, and then we would say asset disposal, right? Someone paid us 75,000 rand. Therefore, bank would then come here as 75,000 rand, right? These three will always be there, right? Asset, whatever asset you dispose of will always be on the debit side. Then on your credit side, you always have your accumulated depreciation and bank, and then from there you then figure out what the profit is, right? The way we figure out the profit is we take the larger side. The larger side in this scenario is our credit side by 161,272, right? Then bring it this side, 161,272. Then we subtract the vehicle's amount of 160,000 and we're left with 1,272, and this will be our profit on sale of asset. Sale of asset, right? Same thing, that is debited, so this will be then credited as asset disposal with 1,272,000, right? Then you have answered the question, right? You've disposed of the asset, but I want to just go one step further and explain what happens after you dispose of the asset, because remember, now you can't leave these accounts opened. You have to close them. The bin here, this bin has been closed, right? The debit side is equal to the credit side, and therefore it is closed. Nothing is left. This one does not get carried to the new month. Each month this account gets closed off to the profit or loss of asset, and this then gets closed off here to the profit or loss account. Profit or loss account with 1,272, right? Then we would come to our accumulated depreciation. Now here, remember, we're working on the balance, right? We had total assets here. This was total assets, right? All our assets before we sold it, this was the accumulated depreciation they had, but then we sold the asset. Therefore, we should have a new balance on it, right? So what you do is say, I'm going to write it on the side here, 126,272 minus 86,272, right? Therefore we have a balance of 40,000, right? 40,000. That is our new balance. Now remember, we have to calculate depreciation for this current financial year, so it would be there as depreciation for this financial year, because accumulated depreciation consists of all of our depreciation added together. So it's depreciation of year 1 plus depreciation of year 2. That gives us accumulated depreciation in year 2. Accumulated depreciation in year 3 would be depreciation from year 1, year 2, and year 3 added together, right? So we're going to calculate the depreciation here, but remember, now our depreciation is 20% on diminishing method. I forgot to add that part, right? 20% on diminishing method. How do we calculate 20% on diminishing method, right? Our formula of calculating depreciation on diminishing method is always cost minus accumulated depreciation multiplied by the depreciation percentage, right? Now our cost also includes the asset that we sold. We have to take it out. So this side, it will also be, let me just write it neatly here, it would be 280,000 minus 160. So to calculate depreciation, it's going to look like a very long, very confusing thing, but it is not, right? So depreciation is equal to the 280,000 minus the 160,000 of the asset that was sold, right? Then you say minus here 126,000, which is the total accumulated depreciation. This one there, the total, minus 86,272, which is the depreciation of the asset that we sold, right? We have to take that out, multiplied by 20%, right? So remember when I said dustbin, we're throwing everything that has to do with the asset that was sold into the bin. This is what we're talking about. So we excluded, this is the asset sold, and here again asset sold, right? So what we're doing is that when we're calculating our cost amount, we have to exclude that asset. So here we will have 120,000, meaning that of the assets that are sold, it's 120,000 rand, and then of the depreciation of the assets that are left, of the assets that are left, what is their depreciation? And that is 40,000, right? Then from here we have the normal equation of calculating we have the normal equation of calculating accumulated depreciation, right? Cost multiplied by accumulated depreciation multiplied by percentage, and we have the same thing there. Cost accumulated depreciation multiplied by depreciation percentage, right? Then that should give us 16,000 there, right? So when you do your fixed asset note, you note 3, right? You note 3, and they say that calculate the depreciation for the current financial year, but there is an asset sold. There is an asset sold at the same time. This is how you calculate it. When there is an asset sold in your note 3 and you have to calculate the depreciation for the year, you're going to subtract only on diminishing method. No, for both of them. But for on the cost method, you don't include the minus accumulated depreciation, right? So saying on diminishing method, you're going to take your full amount of the assets that you have there, and then you subtract the asset that is sold, right? Then you're going to take your full amount of the accumulated depreciation you had at the beginning of the year minus the accumulated depreciation of the asset that is sold, and then you calculate from there, and it should give you the right answer, right? So coming back here to our books, we have here 16,000, right? And then we look at the bigger side. What is the bigger side? It's this side with 142, the credit side with 142,272, and same thing there, 2,272. The difference there then becomes 56,000, right? 56,000, because it is remember I calculated here the 40,000 of the depreciation of the assets that's left plus the 16,000, right? But this is a generalized way of looking at it. And then this would be our balance carried down, and then our balance into the new year of all the assets that are left, their depreciation would be 56,000 on the dot, right? Same thing with assets. Assets is a bit simpler. We look at the bigger side. Bigger side is the debit side, 280,000, and then 280 there. The balancing amount should give us 120,000. Then we carry that down, and then we have our balance brought down there. Balance brought down of 120,000, right? So that is asset disposal and completing the journals for that, right? Remember that the accumulated depreciation was for the entire year, right? From the beginning up until the end for the assets that are left, right? It was not a complicated question because we sold the asset at the beginning there. But this is a fairly simple question. um, look through it again. Always practice. If you miss something, go through it again. Before I closed off the journals, just look at how the asset disposal was filled in, right? Every time you get an asset disposal question and you have to fill it in, this is the easiest thing that you can do. Asset disposal, just quickly before we close off, then we say vehicles or equipment there. Vehicles or equipment, whatever the asset that is being sold, equipment. And then we have accumulated depreciation there, and we have our bank there. Then if there's a profit, it would be profit on that side, and if it is a loss, there would be a loss that side. But everything in this yellow gold color stays the same. That would be your format every single time. And then when you balance these, your balancing figure is the one that's going to tell you whether it is a figure is the one that's going to tell you whether it is a loss or a profit. So you don't need to worry about that one. But yeah, that is asset disposal in a simple question. Yeah, grab a hand of this, understand the foundations, understand the fundamentals on this one, and then the more complicated questions will be much simpler.